There we go. Amazing. The main themes that we covered in today's weekly lecture or the content that was put together for us, it is mainly to develop an understanding of the mechanics of the stock market, the types of stocks, exchanges, what are IPOs, and overall how trades happen, right? I think that these are a lot of things that we initially don't take into consideration, or they kind of just like go over our head because a lot of us just dive into the deep end as far as, well, how do I get in and out of a trade, or how do I buy something? How do I hold a share? How do I get into an options contract, futures contract, whatever it might be? So it's I think a little bit overwhelming when you don't first start with the initial foundation of, well, these are the instruments that you are working with. I think that's what's made me feel a lot more comfortable in just knowing or feeling like I know what I'm doing with these types of vehicles or instruments within the market. When you're talking about stocks, or even beyond that, last week we talked about currencies and crypto and stuff like that. So whether you're starting from zero or already dabbling in the markets, this space is ultimately built for us to grow and to sharpen ourselves and to learn how to navigate the financial world with confidence and intention. I would say, because it's very easy to get lost in a lot of this, right? Every week, the intention will always be to dive into core market concepts. Really, the ideal emphasis would be to work through real world examples as we see things develop in a day-to-day basis or from week to week within the markets, and overall build a really good sense of the technical skills needed and the mindset that it takes to be consistent. Because overall, one of the biggest factors that will impact our performance is consistency, right? Just showing up, whether it's showing up to these types of sessions, to workshops, to the charting sessions, which will have one opportunity tomorrow afternoon if you all are available. If you're not, it's going to be recorded and posted that same day. So no need to worry. But a big part of it is just showing up, right, and preparing yourself for the days, the weeks to come. So I couldn't stress that enough. And I don't think that the intention here is for you to memorize everything this week. I think it might have felt like an information dump because there were 35 plus slides available in this week's presentation. But this is where the intention is to explore, to ask questions, and overall lift each other up. To get us started, if y'all are okay with it, I would love to do a quick warm-up question or questions just to kind of get our brain turning and start thinking about some of the topics that we covered during this week's lecture. If you all, as silly as it might sound, if you all could travel back in time and buy a stock in whatever company during its IPO, which would it be and why? You can think about things like long-term intentions, any sort of like big iconic things that you've heard about happen within the market, or just overall your personal favorites.
I mean, I would definitely go for a lot more of the chips and pay attention to that kind of stuff more, especially Nvidia and like, seeing all that kind of opportunity rocket out. But, as everything's happening right now, like everything's on sale. So I'm like looking at those different opportunities right now as well. Um, so I'd say that one for me.
Awesome. It's definitely a great sector to have gotten in early, and a lot would say it's a growing sector, right? So still lots of opportunity. I
I
think
had one that
for,
was
oh yeah, go for it.
right. I had one that I was invested in. It was CrowdStrike. It was one
Hmm.
of my favorite ones because of how the tech industry is blown up, but also our data needs to be protected as well. So CrowdStrike is one of those companies that the cybersecurity. So as one of my
Mhm.
favorites, I was holding for about a year or two, and for whatever reason, I just didn't hold on till for the long term because I just had to take it out off the table from based on the gains that I saw. But there was more growth to it, and I wish I could have held on to it even just longer because it's the fact of how it just blew up even more. So I guess it's just one of those things where like, you just gotta learn how to hang on to those winners.
Oh, definitely. And that's a thank you for bringing that up. Because it'll be something that we'll dive into more in depth in a bit. I have my stories too, right? And I feel like a lot of us have a lot of those stories or the what ifs or if I knew this at that time or if I was in the market at that time. I mean, I can talk about some of the Titans, right? Like JPM, so Chase or JP Morgan. If you take a look at when this was initially introduced into the market, it was like $3.25, right? And now it's like 200, 300 something dollars. For me, I always think about the financials of the banks. Like what if we would have been alive back in the day and had that opportunity to ride something that seems like it's forever growing without much retracement. But I'll go ahead and give you a little bit more examples about what I've done, where I've lost some, where I've gained some a little bit later. But is there anything that you wanted to introduce, AJ?
Oh yeah, if I could go back to the initial IPO, it probably would have been Microsoft, and I say that because like I majored in computer science, and the way I was looking at degrees was like what field can I go into that I enjoy and I'm halfway decent at, but also in terms of job security, more than likely I should be able to find some kind of work, like even if it's help desk.
Yeah.
If if for some reason I can't find work, that means something has gone terribly wrong.
Oh yeah. And I love the fact that you brought up your area of expertise, right? The understanding that we all do things on a day to day that we can take advantage of that knowledge and the understanding of different sectors. I think one of my biggest regrets, I guess I would say, was being in education and being thrown into Zoom before Zoom was Zoom or before it ran up the way that it did, right? When I remember when I first started using it, it was maybe like mid to late 2019 when it was like actually within my day-to-day or work setting and not thinking much of it, and then really going through like these COVID closures and online education and things like that. And then looking at once I was like finally established, or what I would say I was more comfortable with the market and seeing, man, this stock is like at 100 something dollars. And then looking back to what was it in 2019? What was it in the early 2020s? Being in the like 20 or so dollar mark, it was insane, right? So missed opportunities, but also the realization that there's a lot of there's a lot to take from your day-to-day life. So definitely something that I encourage you to keep in mind, because again, if we would have held until today from IPO, or if we would have added on the dips, whatever it might have been, just developing that understanding could help you strategize, right? Or plan out for what will I do when that next opportunity comes, because those opportunities come in and day out. It might take a while, it might take a few years for us to see another rising industry or push in the market. So different types of opportunities will appear as we go. Awesome. Welcome to today's session. We're just going ahead and getting started here with some intros and just an overall breakdown of what we covered in today's or this week's session. So I'll go ahead and push a little forward here. Let's make sure that our slides are aligned.
I do have a quick question for you. How you
Yeah.
mentioned like missed opportunities. So a lot of times I feel like I have I guess for lack of a better word, a blind spot. Like I've had an NVIDIA Shield that I use daily for like 5 or 6 years, and not once it never occurred to me to invest in it because when I always would think of NVIDIA, I just thought graphic cards, and that's where it stopped. And then one day it was in the news, and I was like, at this point, it's too late. Like I missed the boat.
Yeah, it's very, I would say it's difficult to catch on to things if you're not immersing yourself. And that's what I love that you bring that up because a lot of it can be luck, right? Just you'll never be able to time everything perfectly. And really, a lot of the big winners that I've had, a lot of the big winners that you'll have, and everybody else in today's meeting and the group will have, none of them will be timed perfectly. You will not enter at the very bottom and catch 100% of the pump. Or if you're playing the downside, you will never catch 100% of the drop, right? Odds are you won't, at least it could happen. But I think about how I've been able to position myself is just being aware and showing up, whether it's watching the charts on a day-to-day basis as market is open, looking at overall market sentiment. And I know that that's very general of a statement to make, but it's building an understanding of what's going on a day-to-day basis, month to month. How are things being affected, right? So that's the whole goal of this. The entirety of this course is to help you build that understanding of what should I do on a day-to-day basis to make sure that I'm immersing myself, but more importantly, immersing yourself in the right content, right? Because there are so many news sources out there that will try to sway you one way or another. The understanding that a lot of these organizations, they might be owned by certain companies that want to sway you one way or another, or want you to put your money or allocate it within to their own benefit. Right. So how do you discern that? And how do you build an understanding for yourself? So I know this isn't like a direct answer to your question, but a lot goes into taking advantage of those opportunities or catching those opportunities. I think about most recently, if you take a look at the portfolio breakdown that I had, which I need to update, but there's a section within the server that's a portfolio breakdown of some of the holdings that I had starting last year. A good amount of those I've sold out, and we're going to talk about some of those specifically. But I think about two main opportunities that I got to take advantage of, and not necessarily timed perfectly, but one was through a mixture of my own understanding and the blessing that I have um, through my fiance. And I say this because, as you know, I'm within the field of education, and I have a love for the market. I have a pretty good understanding of financial things, and I love tech in general. Anything from computers to devices or phones, whatever it might be. I just have a love for these things. So I'm not fully immersed into, or at the time I didn't really know, like you said, the ins and outs of NVIDIA, right? Beyond GPUs and CPUs that are two of the main things manufactured by some of these big tech companies, right? But through her understanding, she's very lucky to be immersed in the biomedical, like pharmaceutical field of study. So to me, it was a came from a conversation. Specifically, what I'm referencing is RX or Recursion Pharmaceuticals. She was very blessed to have been able to attend a research conference, right? Because this is what she does on a day-to-day basis. She is a researcher. Just to give you a little bit more background about like my own life and those around me. But she got to in at this conference take part in a session where some of these individuals were presenting some of the research work going on, and a constant theme that she was talking to me about throughout the entirety of this conference was AI and how certain organizations where it's Novo Nordisk or a lot of these Pfizer, um, Merck, a lot of these different pharmaceutical companies are starting to make use of new technology to advance or to speed up the process of certain things that they do. And within Recursion Pharmaceuticals, it has to do with imaging and using AI to pick up on things that the human eye can't really pick up as feasibly within pictures of cells under microscopes, right? Just to keep it broad and not really go as in depth. So then that kind of like lit a bulb for her. And throughout the whole conference, it was a lot of these things popping up. How do we use it to do this? And imaging specifically. So to me, I'm like, oh, okay, that's a really great understanding to have. And then couple that with my understanding of what companies like NVIDIA, AMD are doing, and then hearing that RXRX is having some sort or trying to establish some sort of partnership with NVIDIA to make use of their GPUs and the tech that they're building to use it to analyze their research work. But at that time, at the point of me like diving into this and hearing this, that announcement was already made, right? So where I initially, I think I forget what the IPO was, but it hit a low of like $2 or $3. By the time that I was developing this understanding for myself, that stock was already at around $6 or so, so tripled from the low, right? But feeling comfortable and knowing that this is something that is long term, the technology or the research coupled with the tech hasn't really fulfilled its purpose yet because they haven't came out with some sort of like groundbreaking some sort of groundbreaking research or finding, right? So to me, it was the understanding that this is long-term pharmaceuticals are hit and miss, but willing to put in just to be upfront with you. And again, you can see this whole breakdown of the quantity and the amounts. It was around like $1,000 there. Seeing that growth within about 3 or so months, the stock hitting, I think it hit a high of like 970 or no, 879 or something like that, a little bit under $9 before I started to see the overall market starting to shift. So I just bring this example up because you mentioned feeling like it was too late to invest, right? And sometimes it will be, but it really does take time for you to really immerse yourself in that company, in that topic, that field, right? Because you don't just want to do heavy research on NVIDIA or RXRX or Victoria's Secret, right? The different types of companies. You want to also understand what's going on around them and how are they positioned against other companies within the same sectors, the same fields. What type of work are they doing? And is that something that makes them more attractive than those around them? So a lot of things that go into that. Just to start giving you an understanding of things to think about when you're thinking about these different topics or potential investments for yourself. Does that kind of make sense?
That does. Thank you.
Yeah, of course. Awesome. And on that note, we'll go ahead and start to do a little bit more of a deep dive or a review of some of the main topics. The first one that we covered were what are stocks, right? Would somebody be comfortable in giving me a quick explanation of what a stock is? Not just the textbook definition, but what is your understanding of it in your own words?
I'll take a stab. For me, I would consider a stock just like an individual ownership in a company versus where the ETF is like a basket.
Yeah, definitely. And thank you for bringing up that difference between a single stock and an ETF. That's definitely it's a great understanding to have. And one of the big things that I also want you all to develop a pretty good understanding of is the difference between a common stock and a preferred stock. So ownership class. And I know that preferred stocks aren't as readily available in today's point in time. More so, this was something that was a lot more attainable when the market was growing. And I say this because common stock is your typical Apple, Microsoft stock. We kind of touched on this a little bit last week as far as what rights are you given, right? Where within a common stock, you're given things like voting rights, you have the rights to accrue dividends, overall appreciation of the stock, depending on how many shares you have. One of the biggest things, though, when it comes to preferred stock, is when you think about potentially being a bigger player in the market, is the opportunity to have some sort of leverage or additional leverage when it comes to things like voting rights, when it comes to fixed dividends. And I think about individuals like Carl Icahn. Does anybody know who that is? Awesome. That is good news to me because my intention is to one of like the weekly sessions or one of the weekly videos or uploads that you all will start seeing is a breakdown of individuals within the markets, right? Individuals that we can learn from. And the reason why I bring up Carl Icahn is that he's a pretty well-known individual in the markets because of how he's maneuvered and his willingness to take over companies, whether it's hostile takeovers, whether it's asset stripping, things along these lines, things that will go a lot more in depth as we go deeper into this course. But I bring this up because the one of the big differences between a preferred stock is that when you own preferred stock of a company, it says it here, right? It pays a fixed dividend and it's kind of acting like a bond. So you dependent on how many shares you have. For instance, I know that Wells Fargo offers a, if I'm not mistaken, Class A preferred stock. What this means, and as of now, actually, it's an 8% interest on your investment. What it also does, and why this is important, is that if a company were ever to go bankrupt, when you own preferred stock, you're front in line to actually get your investment back or get some sort of payment. Whereas when you own common stock, if a company goes bankrupt, you're owed nothing. So odds are, if a stock goes to zero and it's common stock, then you lose your complete investment. But if you own a preferred stock and a company goes bankrupt, what happens is that you've seen a lot of companies, especially retail companies, sell off, right? I think about I don't know if they're publicly traded, but recently, last time I went to a mall, I saw a Forever 21 store closing down. Not only are they selling all of their merchandise, but they're literally selling all of the equipment within the store, the racks that hold their clothes, they're selling the shelves, literally their computer, everything within the store is being sold. And the reason that that's happening is because they're trying to get as much money back from all of their investment, whether it's selling their buildings, the actual merchandise that they sell, to then pay out those that need to be paid out. So that's where preferred stock comes in. Again, this used to be very popular. Earlier in the market, but companies like Apple, Microsoft, Nvidia, they no longer offer these types of things unless you were in on the front end of things, some sort of angel investment, things like that, prior to IPO. But there are a few companies out there that you could get preferred stock for. So I just bring this up to give you that understanding, or maybe just to nudge you to look into, well, what are those opportunities, and is this potentially, are these potential safer investments for me, knowing that even if the company doesn't necessarily appreciate the holding of the stock, at least gives me some sort of fixed dividend, right? And it doesn't mean that they always have to pay you out, because companies can miss a dividend payment, or they'll say, hey, we're not offering dividend this month, or whatever it might be. But when it is offered, it means that you're guaranteed some sort of return, depending on the terms of that specific preferred stock. And if you take a look into the history of preferred stocks, back in the, and I say back in the day, but about a decade ago, like 2013-ish, 2015-ish, Apple actually stopped selling preferred stock. They used to, and they had some, they tried to pass within their organization an opportunity to continue or to introduce preferred stock again, but it didn't. A lot goes into that because of the fear of a company being taken over, right? Because if you do own preferred stock, then you have an opportunity to do things like Carl Icahn, where he came in and dismantled an airlines company. What he ended up doing is not only selling off the jets and all of this equipment, but more importantly, when you think about an airline company, what is the true value? Does anybody know?
Wait, Rios,
Yes.
you said that the stock market they don't offer any more preferred stocks to own anymore?
No, that it does. Certain companies do, but a
Oh,
lot of
okay.
them don't. Yeah, so
Oh,
you
okay.
can find preferred stock. Like what a lot of the banks, they offered preferred stock. Wells Fargo has one. JP Morgan has one. So there are companies out there, but a lot of the newer, like especially growth companies, they won't offer it. But you can go ahead and research which ones do and which ones don't.
Yeah.
Does anybody know where the true value is in an airlines company?
The true value,
Yeah,
like how they make their money.
sort of. So if you were an airlines company owner, what
Mm.
would be most valuable to you? It's hard. I did not
Yeah.
really think about this much until I started to do some in-depth research into why ICANN did what he did, or how did he do what he did. And airline companies operate very much so, like at the bare bones basic level, just like your paper route would, or just how, let's see, a landscaping business would work, or how a bus route would work if it was a private transportation.
So are
It's
you
the
going?
Mhm.
Oh, go ahead.
Go for it.
It almost sounds like you're kind of focusing on maybe the micro transactions. So like not the plane or the maintenance for that, because that's probably costly. And I guess they would have small margins, but maybe like the little add-ons that people can buy and upgrade or whatever. Maybe that.
That is definitely part of it. That what you just mentioned, it go plays a role in It's a part of it. So the main thing is the routes.
The travel routes
The
you're talking about.
travel routes. Yeah.
Um,
The airlines actually own specific travel routes. Like, have you thought about why Southwest only goes to specific cities or specific international flights? Why does American Airlines only touch certain airports? Why does United only touch certain airports? It's the routes that they have ownership over. So
it's
all of those,
crazy.
yeah, all of those micro transactions that you that AJ mentioned, those all play a role in the route, right? How long the route is. Typically, people will spend more money, whether it's what they buy on board, whether it's paying for internet, things along these lines. So the true value in an airlines company is the routes. And what he did is he ended up buying 50% preferred stock of this airlines company. I'll go ahead and link all of that in our group. And in doing that, what he did, now being a majority owner and having specific voting rights to essentially vote himself into leadership or somebody of trust into leadership, you take over a company in a hostile manner, right? And then what he did was essentially asset strip the company, so sold off all of the planes, the actual equipment. But where he made the money is selling the routes to American Airlines for $450 million. So I bring this up like on a larger scale, an understanding of why people might be looking at things or why does preferred versus common stock exist. It does give you different functions within the market. So big things to keep in mind.
How do you even buy airspace? Like, who owns that?
Right? I will. I'll go ahead and link some resources for you all
Yeah, man,
to
that's
dive
wild.
into. But it's crazy. Yeah, I had no idea until I started to look into these sorts of things, and that understanding is what kind of pushed me to dive into, well, what have all these other people done? How did the Sears takeover happen, right? These are the very crazy things that you would never think that people could have ownership over, or moves that you would never think. So lots of different opportunities to make money in the market. But yeah,
They're happening every
400,
day, huh?
yep, every day. And he got 450 mil for selling the routes to American Airlines. And that was essentially the birth of American Airlines, or their big expansion, and why it's so established today.
So you're
So
saying
every
if you have big money, you could change the direction of the company if you like.
Oh, 100%. And it's not
Um,
always your money, right? You can
mm.
leverage other people's money. I guarantee you that all of the funds that he used to initially buy that 50% stake, it wasn't necessarily his, right? A lot of people buy as a group. You're just the controlling person.
So for the
Awesome.
route, would that kind of be how like Verizon and T-Mobile, I know they have like the different spectrum bands or whatever. Is that kind of the same?
100%. Yeah. And have you, this is something in close relation to that when we're talking about communication, communication sector as a whole. When we moved to like where are currently, we had AT&T internet service, right? And we have their communication, their like cell phone plan and stuff like that. We for the longest time wanted to get faster internet, so either the Google Fiber or the what's Cox's like their Gigablast plan or whatever it might be, but it's never been offered here. Why is that? Right? Because they don't have ownership of this territory. So the communication companies work very, very similarly as far as where they can set up their cell phone towers, or where they can essentially set up the hub for those communications or install certain services. So definitely, you hit that right on the head. It's exactly what you're thinking of. One of the other things that we touched on this week is market cap. Did anything surprise you all about how companies are categorized, or how does knowing, I guess my question to you is, how does knowing if a company is small cap versus large cap affect how you think about investing in it?
Can you break down the question one more time?
Yeah. Yeah, thank you. I know it can get a little confusing. When you think about small cap versus large cap, how would that affect your willingness or your interest in investing in a company?
I think it depends on, say, a specific stock you're looking at. I would have to compare it with the other stocks that's in the same relative, um, with the same industry, and then compare it with the size with the other stocks that are quite similar to it, rather than just any other random stock. It would have to be relevant to its industry, I guess.
Yeah, well, 100%. For me, one of the big things, and actually let me bring this up before I show you. When we're talking about market cap, one of the biggest reasons to understand, or why I would nudge you to understand market cap, specifically what type of cap, whatever you're interested in investing in, find themselves in, is because ultimately it's telling you how liquid things are, right? When we take a look at these caps, whether it's a market cap under 50 million, up to 300 million in the billions. I know that a lot of it's huge, right? How can we talk about something being a micro small when we're talking about between 50 million or 50 million to 2 billion? That's insane, right? That's insane amount of monies. But when you take a look at the overall market, it's trillions of dollars. So what this is essentially telling you when you're taking a look at market cap is how liquid your investment could potentially be. And this is where I get to bring up one of I wouldn't say necessarily a failure, but one of the lessons that I've learned with a company that I loved very dearly. And this was early on when talking about plugs specifically. And I want to bring up Plug because it's one of the companies that had a huge run up right here, early 2020. We hit a high of like 75, 50-ish dollars and have never returned to see it. Right now we're under a dollar. It's at 88 cents. So the reason why I bring Plug up is that forever it was essentially a penny stock, right? This is a company that has existed for years, lost its market cap, only regained a lot of market share because of the hype that went into renewable technology, renewable energy specifically, and what they were working with. Plug itself does a lot of hydro power, or their specific area expertise is hydro tech, right? So they're talking about that and electric. So talking about how do you start to power a lot of the day-to-day vehicles that we use, or even planes, right? There's a concept plane that they had been working on that specifically was hydro powered. So I bring this up because my initial comfort in investing in this company came not too long ago. You'll see it listed within my portfolio. I started to dip my toes around here. I think my first entry was around like $4 or so. And for a good while, I want to say like maybe a year, I kept averaging down. Luckily, I learned this lesson with minimal exposure. So I first started, what I was doing is every time that I would get a deposit, whatever like money left over from my initial purchase, because Yeah, I think, doing a monthly deposit of like 500 or so dollars. So you're not always going to be able to spend the full 500 on specific entry, right? Because share prices will make that uneven. So whenever I would have a couple of bucks left over from my intended purchase, I would devote that to plug. So I started getting a share, two shares, five shares here and there. But essentially, what I was doing over a year or so was just averaging down. And what I had to realize was that this thing, or this specific company, kept losing market share, to the point where now it's going to be pretty difficult, or it's going to take a pretty long time for that investment to go green. And luckily, it's less than like $250. So it's not a huge exposure, right? And I don't want to sound like insensitive, because that is a good amount of money. But in comparison to the overall portfolio, it wasn't a big chunk of it. So that's what's shielding me from that losing trade or that losing position. But also, the like I said, the realization that this is losing market cap. So I could be devoting my funds into something that is a lot more realistic, or that has enough hold of the market to continue to be liquid. And that's, you'll hear me emphasize and bring that up over time, that the liquidity of things, because when I started to share to want to sell off some of this portfolio, having green in a red market environment, it made me think, hey, I need to secure some funds here, pay off some debt, some student loans, right? Whatever it might be. I wanted to just get rid of plug, because I knew, or I felt that at this point it's a losing trade. I might be interested in coming back into it when I see the company fundamentals start to change. But when I went and started selling some of my Victoria's Secret holdings, some of my Roblox, some of these other very liquid companies, this one, the order was placed and it wouldn't sell, because there wasn't any interest, right? People didn't want to buy, and I was trying to sell even below market orders, and a few shares will sell here and there, but my full position that I was trying to sell, I couldn't get out of it. So that's something to definitely keep in mind. And I eventually was able to sell out of it, but it took time, right? Because the interest wasn't necessarily there. So sometimes it might feel like, oh man, I'm getting myself stuck in this. I don't know how to get rid of it, and you might have to sell under current market value just to push yourself out of certain positions.
Yeah, Rios, quick question on
Yeah.
the investment that you made into Plug.
Yes.
So when defining when to pull out, what exactly which conclusion did you make in order to make that decision?
Yeah, a few things went into that. Number one, it was definitely the realization that this thing is not just, it's losing value because it's losing market cap, right? There's not as many investors in it. And the second realization, which I should have probably realized a lot sooner, were the company fundamentals, and the fact that at that point in time, they tried to issue additional shares to get more money. So they're trying to, essentially, they were diluting the
That's not a good
shares.
sign.
Yeah. So you don't
Okay.
want to be diluted. It was already losing market cap, and then you're diluting things. So for me, it was a lot of how they were going about raising funds, instead of backing up like your product or the research behind the products that you're putting together. It was oh well, let's throw a Hail Mary out there and see if there are additional people there willing to invest more money. And I'm like, I know, like, I want to see the product being developed. I want to see outcomes from the research that you're putting together. So those were two things that really
Yep. And the
started
product
to
hasn't been produced.
it's not working tech. Like, there are working concepts, but it's not something that they've been able to mass produce. That's also a
Um,
big a big challenge to many of these companies, right? You might be able to do it on a small scale, but what does it look like to actually bring this to market and actually have day-to-day people be able to use these products? Or if you're putting together a alternative fuel airplane, what does it look like with regulations, and how do mass adaptation of that, or how does it look like? So it's something that's definitely, it's going to take time.
So the first signal was when you saw its market cap losing itself.
Correct. In comparison to what we saw here, right? Like
Yeah, yeah,
when you saw people just throwing money at it, seeing price reach all-time highs, how do you go from that to under $1, right?
yeah.
Almost hitting half a dollar.
That's not
Um,
good.
Yeah, not good at all. That, and then you take into consideration market conditions and just the fact that everything was kind of getting ready to drop, and it felt like everybody knew that, right? Like we need retracement. We've been running for X amount of years. Like there needs to be a cool down naturally because of the cycles that go on in the market.
Got it. Thank you.
Yeah, of course. We also got to
Just a quick
introduce.
question.
Yeah, go for it.
So, so it sounds like kind of had a trade plan or belief and plug, and when the market cap dropped, that kind of invalidated, so you got out. Is that fair?
Yeah, definitely. That played a huge role in my decision. That, and then just diving into, well, why is it losing market cap? Right? Why are people exiting? Why isn't it as liquid? It has you, or forces you to dive into the fundamentals of a company. Why aren't they making money? Why are they having to issue new shares? Why are they doing all of these different things? So my first cue was just the loss of market cap, and it doesn't happen very, like, it won't happen as drastically as plug. So sometimes it's hard to say, well, I'm going to exit Apple, or I'm going to exit Nvidia because of market cap, right? You saw Apple go from $1 trillion to then losing to gaining it back. So that won't always be the indicator to enter or to exit a company. That was just for this specific example because of how drastic it was for plug.
Okay, so like in I guess in my example, years and years ago, I bought like 5 shares of Facebook for probably like $40. I didn't know what I was doing. I
Mhm.
bought it, and it managed to run up, but I didn't have any real conviction. So based on your experience, how do you balance I guess like believing in it, and then kind of, I think it's called sunken cost fallacy.
Mhm.
Like
Yeah,
how, how do you, I don't know, balance it out or whatever.
yeah. It for me, and actually, I'll go ahead and bring up the example that I was referencing earlier, and this ties into our conversation with IPO. So perfect timing to ask that question, because the example that I wanted to bring up, and really one of my biggest winners, funny enough, and I'll touch on two, but Roblox. So I want to bring this up in relation to your question, as well as the introduction to IPO conversation within the weekly lecture. We talked about, or it breaks down the IPO process, and just an understanding of why do things pop, why do things decline, so why are IPOs sometimes seen as a unicorn, why are they uh flop, how do you follow the interest, what is going on here? So I didn't necessarily get the opportunity to invest early on into Roblox, right? This first candle, we're looking at the weekly chart here, if you all are able to follow me here. The very first candle, for a weekly candle that um, Roblox has here situated, it was a low of $60 and a high of about $78. what you see here in the gold zone, this is essentially the average price for that week. So for me, this what you would want to see is for Roblox to come back up to this, right? Ideally, you want it to go above all-time highs, but you want to see progression towards that IPO price because this is what people initially bought into it as. And if you're thinking about what does a fundamental or a long-term investor do, you're holding for decades, right? And this was just introduced to the market in 2021. So if you're thinking about somebody that's going or has the mindset of holding this until around early 2030, mid, even into the 2040s, you want to see that progression or that continued appreciation, right? So to your question now, when you talk about, well, having been in Facebook or Meta at this X price, how do you determine whether it's an opportunity to hold or you just take profit or you take a loss? A lot of it will have to do with your own personal preferences and your trading style. So I say this because when I started to gain an interest in Roblox, it was probably around here as it started to retest its IPO. This isn't necessarily where I initially bought in, but it was when it started to retest the IPO that I started to want to look into it. Why were we seeing retracement? Why did it run up as much? And it was the realization that at that time, Roblox was one of the online companies offering a service with the largest amount of subscribers. If you take a look back into the conversation that was happening really between 2020 or even late 2019 up to this point in time, and where Facebook or Meta falls into is engagement, right? The amount of subscribers that you have, the amount of people using your service. So one of the biggest things that caused the run up in growth, especially tech, social media companies. So when we talk about Facebook, when we talk about Tesla, when we talk about Nvidia, when we talk about Netflix, all of those companies, they do different things, right? Where Facebook is mainly a social media platform, Tesla offers vehicles, Netflix offers content, right? They're all three different types of services, or they offer different types of merchandise, however you want to see it. But the big reason why all of these ran up together essentially was that they had a growing engagement. So you had more people registering, signing up for Facebook, Instagram, all of the different spin-offs, right? Because Instagram and all of these things that are owned by Facebook, they all feed into the same system. The same login to Instagram gets you into Facebook and all threads and all of these other different services, many spin-offs as they do. It's all the same thing. It's all held in the same servers. And where Meta started to benefit from and what would have made me feel comfortable staying in that specific trade if I had held it was the understanding of where does Facebook or Meta really make their money? It's a kind of like a question very similar to the airlines, right? Where do you or do you understand? I'm sure you do understand where Meta truly makes their money.
Now I would just assume data.
Exactly. It's the data, right? Because they know how we behave, they know what we're clicking on, they know what we like. So all of that data then starts to feed into advertising. And that's why Google ran up as well, right? Google's or if not one of the biggest advertisers. It's where you find everything. So it is data. When you start to look at Tesla, it's very interesting because there's the mass adoption of the electric vehicle, but also very similarly the data behind that, because now that the vehicle is electric, it's keeping track, right? It's a computer, so it's keeping track of a lot of the things that you do, where you drive to, how often you drive, at what speeds you drive. What locations you're finding yourself in. These are things that we don't necessarily think about, but all of that data, it's being recorded somewhere in one way or another, and they're going to be able to make use of it in one way or another when they start introducing new platforms. And I say this because for the longest time, and the reason why Musk bought out Twitter, now X, is the want to start to put a lot of these things that he's working on, or a lot of these services that he offers, in one place. So I don't know if you all remember, but this is now him wanting to compete with Meta, right? Or Facebook. Because his big thing, especially when because X used to actually be PayPal. Do you all remember that? Or do you know what happened there?
I remember that history.
Yeah. So it used to be PayPal, and the understanding, or his big aim before the PayPal group sold their service, was to make it an all-in-one app. And that's what he wants to do now. If you take a look at other countries like China, right? They have a specific app where you log into this app, and it is a social media account. You can watch your Netflix on there, right? They have their own streaming service within the same app. This is where you do your banking. This is where you get your Uber Eats. So all of the this like online meal payment and stuff like that, it's all within one app. So essentially, that's what his hope is in collecting all of this data with the companies that he has access to, is to build out this one central app where we all use it for everything, right? No matter what we're trying to do on the computer, the intent would be for us to log into this service. So to me, building these sort of understandings. Again, I know it's not a direct answer to your question, AJ, but this is what would have led me to feel more comfortable at whatever point in time you had initially invested in that company. What was to have that understanding of what is it doing now, and what am I hearing them state, right, during their earnings calls, because they not only list an earning report, but most companies also have guidance, right? So they're telling you this is what we intend to do in the next quarter, the next year, whatever it might be. And as you keep researching the company, you might hear, hey, they're developing some sort of immersion experience. They're doing, what are they doing with the Meta glasses, right? That made no sense. It didn't really sell too well. But now when you see a company like Apple release this virtual immersion experience, well, and then realizing why did Facebook buy the what's it called? I forget. Forgive me. I think it's the Oculus Rift or something like that. Well, why did they buy that company out, and what are they planning to do with this? Why did they change over to Meta? What is the intent behind that? So again, not a straight answer, and it's very difficult to say look for X, Y, and Z, but the intent and what I'm working on as we lead into the bulk or the meat of this course is to start to have that list, right? And to provide some sort of document that I've been working on that walks you through, consider this, consider X, Y, and Z. So you have the fundamental understanding of what is this company doing, where is it going, how is it competing against those in its sector, and based off of this checklist, is it something that I feel comfortable with staying in 1, 5, 10 years?
Yeah, Rio,
Yes.
to follow along with that, do you look into their 10K reports in order to find their intent, to find the company's mission objectives?
Oh, definitely. Yeah, those are all things that we will be diving into.
Oh,
And that will actually be if you take a look at the syllabus further down, it's an actual project that we'll be putting together. It will be a top-down fundamental analysis of a company of your choosing. So we'll all work on putting together however you all want to do it, whether you want to do one individually or whether we want to do one as a group, or we can all do one individually, come together, discuss that, and then we can work on another one as a group. There will be different ways to approach it, but that will definitely be part of one of the big projects we'll put together.
is the 10K one of the only resources where we can find the company's intent, or are
No,
there
not
other reports?
there's a lot of different reports and just overall, even if you take a look at a company's, for instance, bare bones, did you know every company issues an annual report, right?
Hmm.
So this is just like a general sorry, breakdown of this is a recap of our year. These are the metrics. This is how we might have or might not have met our goals. And this is how we're looking to move forward. So essentially, it's a pool of every single earnings report that has came out. So there's a wide variety of instruments, reports. It resources from the company's websites that you can pull together to develop that understanding. And we'll have that checklist of these are the things that you should ideally look for because a lot of them are hidden, right? Every single company publishes all of their reports on their website, but they don't make it readily available. You really have to dig through a company's website to find these things. And some companies have separate websites with that info. Like you can't just go on like Facebook.com and find their earnings reports or find all of these things, right? They have a separate website that hosts all of that financial information.
Got it. Thank you.
Yeah,
Oh, I got a
definitely.
quick question. On your
Mhm.
screen earlier, you called the yellow area a gold zone. Is it a
Yeah.
gold zone because that's where it IPO'd?
Correct and perfect. You've been on it, just perfect transitions for me. He's super helpful because I did want to definitely wrap up Roblox here. The gold area for me was the IPO. That's the IPO price. So when you think about what does success look like, or is this going to be a long-term successful company? Again, we think about those that have been holding since the beginning and their reasoning. Is this something that has continued to hold at some point? Are we establishing some sort of consolidation? So where are we building that foundation? So for me, I want to see price come back up here. Didn't mean that this is where I was going to buy in. Potentially for me, that's where I was going to have my first sell depending on where I got in down here, right? Or this was going to be potentially where I felt comfortable adding more if we started to see consistent holding within these areas. But for me, beyond just being IPO, you think about what are the psychological price points or areas that people are interested in. It's IPO, it's whole numbers, it's wherever some sort of big event happened within this specific company. So for me, when I started to look into it here, or even as it dipped, in my mind, it was always we need to get back to IPO price. And there's a huge potential here, right? Well, when we start to see this dip below 22 and understanding that IPO hovered between 60 to 70 ish dollars, well, there's the potential to at least double, or if it breaks above, even triple your investment, right? If you're buying at these lows. So initially, when I first dipped my toes into Roblox, it was actually around the 40-ish dollar mark here, like in the like late 2022s. This is something that I think I had bought in like 5 shares at most. So it wasn't a very hefty amount or a sizable position. But in the run up, and I told myself I'm going to hold this for a while, so I don't intend to sell at this point in time. And this run up here in like late 22, uh, was very much so related to the run up in Facebook. If you take a look at late 22 for Facebook as well, it was when market kind of started to bottom out, and then we started to see that run up in the market from mid to late 22 to current point or current day, right? Where we've seen recent highs as of late 24, early 25. So that's when I initially bought. Of course, I ended up going red. I did not buy in again here, which was late 22, run up right before to where I became profitable again. Did not buy, rejected, rejected. And when we got to like late 23, this is when I started to see, man, we're building some sort of resistance here where we've rejected multiple times. So I want to see a solid break above it. I was very close to exiting my trade when I started to see this was one rejection, two rejections, three, four, five, six, seven as we headed into early 24, right? So for that, my thought was, well, how much longer can we stay at this consolidation? It has to break one way or another, right? Because if we take a look at price between the $50 mark to 22, essentially that 25 or so dollar range, it's consolidation. And to me, that's what gave me the understanding or the comfort of, well, it hasn't broken one way or the other. So I'm comfortable then holding this until I completely break down below the previous low. At that point, I have to consider, am I going to take my loss or do I average down? So I was never going to average down unless we broke that previous low. We never ended up breaking that previous low, but around here in late 24, I actually ended up adding a pretty sizable position. So I at that point, I think I had like 100 or so, less than $200 in it. I added about an additional 800. So my total position, and this ended up being a little bit over 1,000. But the reason that I added here is that not only did they have a successful earnings report, but they had hit the largest amount of subscriber count this company had ever hit. And it was actually the largest online game subscription platform at that point in time. So me understanding that and just understanding like the love for Minecraft and what Roblox is and how companies or games like Fortnite are now mimicking what Roblox is, right? Because if you take I don't know if you all play Fortnite or have seen the breakdown of it or what it's turned into the last few years when they started to introduce all of these like mini games and things like of that nature. It was essentially a better or a spin-off of what Roblox already does, where it's a system that encompasses a bunch of like mini games or mini functions that you can dive into within the platform itself, and just understanding how much money is being poured into this when you talk about that subscription model, the online currency, that things along those lines. So for me, that was a great buy-in point. And I did hold until we reached that IPO. I did not sell out some of my position at the very high of it here. I wish I had, but it actually ended up being somewhere around here, like the 62-ish dollar mark when we dipped back below. So I didn't fully I guess, get what I could have gotten out of, or the most I could have gotten out of it. But the reason why I wanted to bring this specific stock or topic up was in relation to our early conversation, that understanding that we're never going to catch 100% of the move, and that's okay, right? There's always an opportunity to buy back in or to figure out what other companies within this field are benefiting or doing very similar to things to this, because when we say that history repeats itself, it really does. whether it's within this specific company or another company that then comes into the same field, introduces a similar structure because they've seen the success in Roblox, and then builds off of it and introduces something more innovative. The opportunities will always be there. So this specific case I've now learned from, and I've built that understanding of when subscription count rises, when it decreases, when a company is seeing a large amount of influx in online currency purchases. How do these things react? How does it affect share price? How does it affect market sentiment, right? As an individual trader, how does this affect or sway us to go in one way or another? These are all things that I now keep in mind as I look for future opportunities. Do you all have any other questions about Roblox, or why I might have done what I did, or just questions in general?
I do have one question.
Yeah.
So when looking at this chart, do you also consider the volume profile?
Yeah, you definitely can. I know that I look at the volume profile a lot more closely when it is a not a shares position, but a trade. So
For example.
that I'll differentiate that, because when yes, volume profile, especially on the bigger time frames, like it'll tell you a lot about, oh, how did money flow into this specific stock the past week, the past month, the past year. So it's good to have that understanding when you're thinking about holding this for months, for years, decades, whatever it might be. But for me, it's more important when I'm looking at a day trade, when I'm looking to scalp, when I'm looking to potentially hold overnight. That's when I see the volume profile, at least in my own trading strategy. That's where I see it be more relevant, because we're trying to catch spikes or pops. Right? Whether it's a large influx of selling, a large influx of purchases, that's to me at least more relevant when it comes to a trade rather than a position, long-term position.
Got it. Thank you.
Yeah, of course. Do we have any other questions about some of the content that was covered as far as the market content? Cool. We'll go ahead and start wrapping up our conversation here with some insight in regards to the reading that I introduced in today's or this week's content. Let's go ahead and bring those up. We won't necessarily do a deep dive into every single one, but we'll go over the essence of them, or why those specific readings were chosen. So we'll go ahead and shift gears here into the reading for this week. Whether you decide to just read the market textbooks, or if you decide to dive into some of the mindset material, or both, this part is about connecting the dots between information and insight. This week, there is a large focus or continued focus in essentials of investments. We covered how stocks work, the types of equity, market cap, the basics of exchanges versus, or in addition to IPOs versus indices, right? We didn't really go too much into the index or ETF conversation today, but that's something that we'll build a conversation around in the coming weeks. And Beyond the Charts does offer optional pieces by Marcus Aurelius Meditations, or Kahneman's Thinking Fast and Slow. These two readings are both aimed at helping us think more clearly about the decisions or the reactions that we have within the market. Some of the questions that I hope you think about while you're going through these readings, if you haven't gotten the opportunity to do so already, are how are these readings shifting or reinforcing your understanding of what it means to own a stock? Does it make it feel less intimidating, or what type of understanding does it bring to you personally, right? Because we're all going to take different things out of these interactions, conversations, these readings. In addition to that, was there a specific section that confused you, um, really encourage you to think about that, or a specific section that you felt like, man, this is really crucial for me and for others to know. So we bring that up during conversation throughout the week. And just lastly, what did you find most helpful, or what didn't you find most helpful, or what should be like a foundational break of this week, as far as if you could remember anything from the weekly conversation, what would it be? When you take a look at the two readings beyond the market education, there's definitely a reason why those were chosen, right? When you take a look at Marcus Aurelius's meditations, it talks about staying calm. It talks about staying calm, rational, and detached from outcomes. Oh, give me a quick second here. Sorry about that. Are you all able to hear me fine?
You're good.
Okay, awesome. Oh, my headphones started picking up a different video. So Marcus Aurelius's meditations, it talks about staying calm, rational, and detached from outcomes. Definitely a big thing when you start to think about how does this mindset, or how does this understanding apply to your first win or to your big loss, right? When we're talking about just managing your day-to-day trades. Kahneman's Thinking Fast and Slow covers two different systems. System one talks about fast and emotional responses. System two will talk about slower and more analytical responses. So when you think about buying a stock, which system do you think is in charge, right? How do you slow yourself down to think more clearly, or in what specific circumstances might you want to react more fast, or react in a manner that might cause you to enter, exit a trade in a split second. So just to bring it together, these readings aren't just here for theory. They're really here to give you tools, whether it's understanding what a share actually is or catching your emotions before they cloud your judgment. All of this stacks into how you'll approach the market over time. When you take a look at the assignment deep dive within the server itself, I'll go ahead and bring this up for us. It's under stock market basics. You'll see the whole breakdown here. It gives you insight into ideally what chapters, what pages you should be covering. One of the prompts that you'll go over is you have four readings here. I don't expect you to necessarily go over all of them in their entirety, but pick one of them that really resonates with you. Each one approaches the markets, decision makings from different angles, whether it's economics, the psychology, belief systems. So take the time to unpack that. For the first one, you dive into Marcus Aurelius's expert. So, what stood out to you? What emotional discipline, and how might that apply to in a real market situation? When you think about Kahneman's system one versus system two, thinking about how does it show up in your day-to-day life this week, maybe even just reading a stock chart or reacting to market news. How does this potentially impact that? If you read Market Douglas's section, he talks about self-image, belief systems, how many of you think how many of you think mindset might be holding back your consistency more than lack of knowledge. And when you think about Adam Smith's reading, it lays out how self-interest drives the market. It brings up the deeper question in regards to if we're all trading for ourselves, what keeps market fair? Right? When you're talking about ethics, and really the understanding that we're all here looking to gain, and in order for us to gain, somebody has to lose, right? So that's something that I really had to like rather like take the time to take a step back and be okay with, because it is the hope is to open up this to as many people as possible and to help people find themselves in better situations. But when you take a win, there is somebody on the losing end, whether it's the person that issued the options contract, whether it is the trader that sold when you bought, or that bought when you sold, and then the price reversed on them. There's always somebody on the other end of whatever you experience, right? When we're losing money, somebody is taking that profit from us. So different things to keep in mind. All of those prompts are listed here within each reading. And overall, when you take a look at the lecture content itself, I ask you to take the time to research some companies, and just in a general sense to get you starting to think about some of the concepts, bring up their market cap, their ticker symbol, brief summary about what they do, and whether they offer a common stock or if they offer the option for a preferred stock, things along these lines. Any remaining questions as we wrap it up here?
I have an off-topic question just real quickly.
Oh, for sure.
This whole presentation, the PowerPoint presentation, is this something that is accessible for us to just go through alone?
Oh, 100%. It's already posted. So if you take a
Oh,
look
okay.
at, yeah, if you take a look at this section here, and you should have access to it if you don't, um, it's here under stock market basics. The course introduction, that was first week. So if you go here, just take a look at the first part of it where I tag everyone. That's always going to include all the materials. So here, that's the lecture PowerPoint that we're actually going
Okay.
over right now.
Okay.
Under it, these are all the books that I referenced. They're there for you. So you have access to all of the materials. After this recording renders, it's going to be posted, and you'll see here the team session recording where it says lecture. I actually have like a pre-recorded um with a voiceover for the lecture here. So it'll be the PDF. It'll just be a voiceover of me going over it more in depth than what we did today. So that'll be posted here. Moving forward, or what the intention truly is to have those sections up to you prior to actually us meeting. So you'll actually have the pre-recorded session and everything else in there by Tuesday night. That will always be the intent moving forward. That way you have time to go over the content, and then when we have these meetings, it's essentially like a debrief and a rundown, answering questions, our engagement, kind of like what you experienced today.
So each Tuesday, once it's posted, we're to go over the assignment and then prepare them by Saturday morning.
Yeah, definitely. Or the assignment itself or the responses, a lot of it you might not do it till after this meeting, right?
Oh, okay.
So
Okay.
yeah, my goal would be for you to at least go over the PDF presentation so you know the content, and definitely start to review some of the readings, just to give you the comfort or the confidence in knowing like you're coming into the conversation already having some sort of understanding of the content. Yeah,
Got it. Okay.
great questions. Awesome. I'll go ahead and actually